Okay, so here we come to the last part of Chapter 9. We're going to be doing the balance sheet. So, we have it in the 6-column worksheet, but we're going to present it in a different format so that people can understand. Alright? So remember, we go way back to Chapter 1, and we had assets equals liabilities plus owner's equity. That was our basic foundational equation. And so upon that, we have expanded it out to all these debits and credits and temporary accounts, and now we're bringing it all back together, and we're going to see, all right, what's our balance sheet? So in this case, our balance sheet is going to show our net worth. How much is our company worth? All right? Because that's the question a lot of people, they ask. They're like, how much did you make last month? And there's your income statement. And then they're like, well, how did this affect our business? Like, you pull out the statement of changes in owner's equity, and they're like, well, then how much are we worth now? And you say, let's look at the balance sheet. Okay? That's how much you're worth. So whenever people in the IRS, in the business itself, other businesses, at a bank, if you're trying to get a loan, they're going to ask you these things, and they want them presented in a simplistic format, so they don't have to wade through your 6-column worksheet. They can just say, what's your net worth? And you say, right here on the balance sheet. And they go, okay, you can get a loan. You know, it's that kind of thing. And so you take this to the bank and present it to them, and so that they can know what's going on. All right, so let's wrap this all up. The balance sheet is going to show our net worth. And we're going to start with assets. Okay? So assets equals liabilities plus owner's equity. So how many assets do we have? We might have a huge long list. I have a small board right here, so we're just going to do 2. Cash and equipment. And, you know, we'd put accounts receivable and all kinds of things like that. But basically, the total of all of our assets, we put it over there, and we put a double line under it and say we checked it, we proved it, it's the total for the assets. So there we go, and someone can look at that and see it. Now we're going to look at our liabilities. We've labeled that, and our accounts payable right here, we owe $2,000. So bankers want to know, how much money are you in debt? It turns out we're $2,000 in debt. We might have lots of accounts payable. In this case, we just have one, and the total would be $2,000. Now you notice I didn't put a bunch of underlines underneath this because that's not a major number. That's just a subtotal. So I might total up all our account payables here, and I would put one line under it. That means I'm adding all these things, and I've got a total over there for $2,000. But it's not the full picture because we still have to add in owner's equity. All right? So over there we go with our capital amount, and we put this in from the statement of changes in owner's equity. So you have to get this number from that document up there, statement of changes in owner's equity. It's the biggest problem I see on the Chapter 9 test. Kids will do the income statement, and then they're just like, I'm almost done, balance sheet, whew, I'm done, but somehow it doesn't balance. Because if you're doing it in this format and you start here with the income statement, you've missed some numbers from the 6-column worksheet. So you have to do the statement of changes to include those numbers, and then from there you bring it into the balance sheet. So this capital account is from the statement of changes in owner's equity. That's where you get this number. So you have to do statement of changes, then you have your capital number. And now, when you total up liabilities plus capital, you get your owner's equity, and it is the same number as the assets, and we're doing good, okay? Because this is a balance sheet. If it does not balance, you've got a problem, okay? And the most common problem is right here. The capital account, you got to take it from statement of changes, so you have to do that, okay? All right. So the balance sheet isn't terribly difficult. You're simply taking, here's all my assets, and here's all my debts, and here's my capital, which I computed from statement of changes, and I put that out there, and when I add my capital and my liabilities together, I get the same number as assets. And so now we have balanced. Our teeter-totter is perfectly set, just like it was in chapter 3 at the beginning. And this is the balance sheet. Now we can walk in with this sheet of paper and say, hey, bank, I'm worth this much, and so I'd like a loan for some, and they'll just nod and say, yeah, okay. Or the IRS will say, hey, we're going to charge a tax if you're over 100,000. You say, I'm not. My net worth for my business is 24,000, and they say, okay, we got it. And so that's the simplistic way of doing the balance sheet so that everyone can understand it and use it and gain information from it. All right? So hopefully that wraps it all up for chapter 9, and I'll see you in class.